Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern, U.S. Tuesday, the 2nd of May, 2017. Welcome to a new month. I missed saying that yesterday. I was laid up with a sore throat and difficulty talking. I'm still pretty much plugged up today, but missing one day is long enough. Anyway, derivatives trading. Oops. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market position this morning is fairly mixed. We have not moved anywhere. The U.S. Treasury bond for June is unchanged since yesterday. The laggard today is the Japanese yen, down 33 pips. Down 0.36%, followed by gold, which is trading at $1,253.50. Gold's been moving lower and lower. Yesterday it closed down about 0.5% from the Wall Street Open, so it lost a little bit during the session. The leader today is the Euro Stoxx up 0.34, and then everything else is pretty much just slightly up or slightly down. Not much to talk about there. As far as the overnight news flow, some of the things that have impacted the trade a little bit yesterday. President Trump came out in the middle of the session at about 11:50 Central, 12:50 Eastern, and said he's looking into breaking up the banks, which caused a very, very quick spike down in the ES. It dropped the ES almost exactly 6 points before the market rallied back up, ignoring that news. Trump's comment is that he's looking into bringing back the old system that separated consumer lending and investment banking. The other news was the World Bank's pushing a terrifying prediction for jobs in developing countries. The World Bank president Jim Young Kim suggested two-thirds of jobs in developing countries could be lost to automation. China's factories slowed down. The manufacturing PMI fell to 50.3 from 51.2. Greece has a new deal, agreed to another round of pension cuts in exchange for the unlocking of more bailout cash. So Greece is still in the same position. Eurozone manufacturing expands at its fastest pace since 2011. Market Eurozone manufacturing PMI printed 56.7 April as output, new orders, and employment all grew at their fastest pace in 6 years. And other than that, we had some earnings from Advanced Micro Devices, AMD, relatively small company, revenue of about $1 billion. And a bunch of others are still reporting. As far as what we are expecting today going forward, the deck is pretty clear today. There's not much on my calendar as far as impactful economic releases. We have a speaker at noon Eastern, 11 Central, ECB speaker Nowotny in Vienna. And then after the market, we have earnings for Gilead, Mondelez, and Apple. So pay attention there after the close for Apple. Apple is a large component of multiple indices, seeing as it is the largest company out there. I'm not going to go over the week ahead, but I want to remind you that really it's all about non-farm payroll Friday this week. Actually, I'll go through the week real quick. Tomorrow, German unemployment, Euro PPI, GDP, UK PMI, and U.S. rate decision tomorrow. ADP, employment, PMI in the U.S. as well. Germany, we have Thursday, we have German, UK, and Eurozone services PMI, Eurozone retail sales, U.S. trade balance, Eurozone, and then ECB's Draghi on Thursday. Friday, we have PMI out of Germany. We have non-farm payrolls and unemployment, as well as consumer credit on Friday. Feds Williams, Evans, and Rosengren. Friday, again, is a big day. Of course, Wednesday as well with a rate decision. Let me look at that more closely. Wednesday, looks like 2 o'clock Eastern FOMC rate decision. The lower bound is 0.75 in line. The upper bound is 1% in line. Not expecting a move. And in the June FOMC meeting, still rated at as a 2/3 probability that there will be a rate hike in June. Although I'm seeing some things in the treasuries that leads me to believe that the Fed's going to ease off the gas on interest rate increases for now, as the yield curve could quickly flatten here. Um, let's switch gears. I'm not going to review Friday's video because it's not really relevant anymore, and I didn't do one yesterday, so there's no review here today. Real quick, I'm going to show you what it looked like when that news hit. Right here, this is the Trump effect right here. So you could see this chart, just to explain, this is my cash indices chart. This chart has the dashed lines are the five key sectors underlying the S&P 500, and I've added the IBB in here, the biotechs for the Nasdaq, and then it tracks all the futures contracts that I watch. Gold is gold, black is crude, green is the U.S. Treasury bond. The other green is the 10-year, and so on and so forth. It's got the Bund, the Eurozone, and stuff. And you could see the macro when you have a macroeconomic or fundamental news event. You see this move that strikes across the board. Gold spiking a little bit. Even crude responded to the breakup of the bank's comments, and that's it. To see if an event is impacting only one sector, if it's a wide fundamental event, this chart shows me that right away. We ended up going back to the scene of the crime and exceeding it yesterday. So here we are. The news comes out right here. We have a 6.25 point drop. And then the scene of the crime here is up at 87, and then the market immediately pops up and breaks through and pulls back to the 87.50 and then trades sideways from there. Notice the volume yesterday was very low, was relatively low. Again, Europe was closed yesterday for May Day, and that's reflected in here. Less trading in the overnight session and a slower trade during the day. Overall, the market we have gapped up, so let's pull in the flex levels here, and we can see we gapped up on the 25th last week, and we have been resting up here for a little bit of time. The market's consolidating right now. The Nasdaq has moved ahead with pushing higher. The S&P is still sitting around waiting for something to happen. The composite profile in this area. Now remember, there's a gap zone down here. The composite profile in this area is fairly mature. You could see that there's a fair amount of consolidation or kurtosis on this profile. It's fairly mature. It's got a good amount of energy here. We're simply looking for a catalyst to start moving in whatever direction the market wants to take, most likely to the upside, as that is the trend, and the gaps are still open beneath us. So this morning the market's trading at 2386.50, right above the point of control, which is at 2385.25, and this profile shows that the market's been trading inside of this range and consolidating quite a bit, especially yesterday. It didn't really go anywhere yesterday. We simply traded the value area of the MC. We traded this area here, the value area, mostly, and consolidated. So I'm looking for today, being as it is Tuesday, a higher volatility day than Monday, and all markets are open and everything is in gear here. I'm expecting that we're likely to see a move away from here. I'm still looking for this week high, this double top here to be taken out. I'm still looking for new highs and a test at 2400 as the higher probability play. But there's really nothing here other than the fact that we've gapped and not touched the gaps for an entire week. Other than that, I don't see anything that says, yeah, the market is weak and is ready to move down to 2370 and below. just yet. We've made several attempts at the gap mid, which was 75.75, but we have failed to hold on, and it's struggled, as we saw on Friday. It's struggled to maintain lower prices, and we ended up gapping up on Sunday morning. A few things to remember, okay? This Sunday is May 7th, which is the final day for the French election. It's between Le Pen and Macron. One is a populist, and the other one is really doesn't really belong to any party, but still is threatening the eurozone with the requirement that the eurozone should change its rules or risk France leaving. So there's a lot at stake with this election. We have something that is being called Frexit that is on deck. For that reason, some clearing firms in the futures world, some clearing firms have moved to 100% margins on everybody by Friday afternoon. So on the close of Friday, which is at 5 p.m. Eastern, if you have a futures account, expect 100% margins to be imposed on your account by many of the major or the most common clearing firms. They're expecting to go to 100%. That means your S&P, you're trading the S&P now for $5,500 a contract and margin, and that's because they're going into this election and volatility is expected. So the clearing firms protecting you and themselves from the volatility risk. So remember that on Friday by the close, expect higher margins to kick in, somewhere around 100% going into Sunday's trade. I will be watching the markets on Sunday. I will be watching what happens. I'm expecting a gap one way or another into the open, the 6 p.m. open on Sunday night of the S&P 500. I expect the Forex markets to be fairly active, and we're going into that. Not only that, we're going into, again, tomorrow being the FOMC rate decision and then non-farm payrolls on Friday. So do we have a catalyst? Do we have multiple catalysts for this thing to move out of this balance zone that we've been stuck in here since the 25th? Yes, we do. And I do expect a pretty aggressive move out of here. So I would suggest that any breach of the high and low of this, you'll want to not fight that because it's got a fair amount of energy to push through and dissipate over a wider range. So that's that. I want to bring up the profile here on a weekly basis, and this is basically what we were left with last week. This is last week's profile right here. This right here is last week's profile. So you can see that we have gapped, and then we have gapped, and we have somewhat of a broken profile. That was Monday. This is yesterday, and yesterday is stacked right on top of late last week's profile, and clearly has broken through this triangle that we've had for a fair amount of time. This was key for last week that we have broken through and it's starting to push to the other side. So I'm expecting that we're likely to continue higher and break through that 2400 high that we've had since March. So pay attention if you're short. This is a good time to either lighten up, in my opinion. Of course, follow your plan, but it's a good time to lighten up or buy insurance through options or something. As far as what I'm expecting for today, a quick review of the overnight session. Very consolidated overnight session, very, very tight. Look at this thing. It is awful. The overnight session just did not have any movement. We've had 4 points of range in the overnight with a point of control just a point and a half from the low, and we're above it. There's just not much that the overnight session's pricing in. Only 99,000 contracts traded. 99,000, that's it. There's very, very little interest right now. The market's in a holding pattern, and I'm expecting it to carry into the open. The open is expected to be an open auction in range. I'm looking for a drop into the overnight low, and then I'm looking for the largest rotation to be to the long side, and I'm looking for a break of this week high, and then an attack on that 94.75 today. That is my hypo one. I'm looking for the market to start attacking upwards. I know FOMC's tomorrow, and there's no sense in the higher time frame committing, but this thing technically, from an auction perspective and the way the volume profile looks, it's got a lot of energy to play with here. So I believe that we're likely to have a pretty extended move. So I'm looking for this big upward rotation, and then once I see that, then I'm going to be looking to trade from the long side using order flow and identifying areas to lean on, like I've shown in the past. The secondary hypothesis is the opposite given the overnight. I'm looking for a test higher that fails, and I'm looking for a large rotation down, pullback, and extension down into the 2379 area, and then a return to the middle of the range later in the session for a kind of a protective position into the close ahead of tomorrow's economic releases. That's my second hypothesis. Okay, those are the two main ideas that I'm looking at. Again, just be patient this week. There's likely to be there's a high probability that we'll get some pretty good opportunities this week. There's no sense in blowing away your risk, all the credits you have for this week early on. Just be patient. You don't have to catch every move. Your goal here is to aim to catch the highest quality moves. Your goal as a trader is not to trade all the time. I know that sounds like an oxymoron, but your goal is to be selective and just catch those place a bet, which is what your stop is. Invest in your stop only when you believe the probabilities are on your side, okay? Anything else is just gambling, in my opinion. Good luck, and I'll catch you tomorrow morning. Take care.